Hey, John, can you hear me?
I got you. Can't see you though.
Oh, okay. Hold on. How about now? No.
Nope. Can't mistake that voice though.
How
There you
about
are.
now?
There you are.
Awesome. Is the
Now
audio loud enough? Everything good?
everything's perfect. I sound good on your end?
Yeah. Yeah.
Great. Well, as you know, we're live, so welcome back. It's been a while. How you doing?
Doing great. How about yourself?
Can't complain. The world is in a weird place, but there's no sense in complaining. You've uh, you've obviously been. I listened to our previous conversation today, and I think it was the Tuesday after the big sell-off on Monday in March.
Okay.
Prior to the Thursday sell-off that was, Bloody Thursday. So, and
So
it made
how
me,
was it? Were we saying crazy things or were we on target?
no, well, I mean, I don't know about my performance, but I think you did pretty darn well, as,
Okay,
as
good.
you're known to do. And I think I think we've come to schedule another talk on a very relevant period in markets and Bitcoin history tonight. So, um, maybe just for the very few people that are not familiar with you, the typical intro spiel, and then we'll break into some of the fun stuff that's going on.
I'm just the guy that really likes finance and I like numbers. And I've been in the space for it's not a decade yet, but we're getting there of just doing media and really kind of got my start much more on the stock investing side with a Warren Buffett style approach. Kind of evolved into some macro thinking with a lot of Ray Dalio ideas, and then in 2015 started doing the Bitcoin thing, and it's been one heck of a ride ever since. That's
And
all I can
now,
say.
and now you're irresponsibly long,
Now,
just like
now,
that.
now I'm responsibly long. I like to flip that on its head.
Yeah, true, touche. Um, well, man, I mean, there's so much to talk about. There always is, and people seem to have an unquenchable thirst to hear from Preston about these issues. So kudos to you on doing your job so well and articulating these thoughts in such a digestible way and a manner in which people obviously have come to value greatly. Let's just talk about the MicroStrategy news because that's what's on everybody's minds. Did you have a chance to hear Sailor on Pomp's podcast
I
today?
did. I did. I listened to it this morning, and kudos to both of them to get that recorded. I thought it was a great conversation. Can't really say there was anything in there that surprised me at all.
Well, nothing surprised me. And actually, I'm going to pull a quote. And I don't think this was, well, one thing surprised me. And I published it on Twitter today, a little audio clip where it was something of the effect like, I don't want to hear about, transaction scalability and this and that. I want you to defend to the death anything that, would in any shape or form inhibit or damage this, this protocol, which for a guy that came into it from by his own admission in March, kind of sitting around the
Mm-hmm.
house with a little too much COVID time on their hands, kind of a blank slate to be that convicted after, 6 months or so was pretty. I wasn't surprised because it's happened to a lot of us, but it's amazing how quickly it happened, I guess is what I'm saying.
I mean, he's a tech entrepreneur. He understands network effects. He obviously understands the macro finance, which, in my opinion, is not where every CEO is at, right? Like they understand their product line, they understand how to keep their customers happy, they know how to evolve within that product or service. But getting them to be good capital allocators is typically um, not real common to find the CEOs that are able to evolve and to think in so many different layers and be good at all those different facets. So he's a very smart dude. It's quite obvious, and I don't know. I think this is a very exciting thing to see play out. It's interesting. I was kind of shocked. I'll tell you the one thing that surprised me was his question to Pomp at the end of the interview, talking about Jack Dorsey. I mean, the difference between him and Jack Dorsey is he has the voting rights and Jack doesn't, right? I mean, that's what it really comes down to. And I think if there's going to be any delay, especially in the public markets of other companies doing big, bold plays like he has done, it's going to revolve around the idea that most of these publicly traded companies have not retained a majority of voting rights, because you can split the earning rights and the voting rights out. And I just don't think when you get into billion-dollar companies, to have somebody that can still have a majority in the voting rights to kind of lead the board in the direction that Michael was able to do. I mean, he was involved with his board. He was giving them homework assignments, but let's not mistake it. He had the voting rights in order to make this thing happen. And I don't think that that's necessarily the case with a lot of publicly traded companies with a market cap over $1 billion. So, as we see this thing continue to evolve in the coming quarters, I think that you are going to see Bitcoin show up on other publicly traded companies' balance sheets. Particularly, I would expect it in tech companies. But I don't think that you're going to see such a bold move like we saw with MicroStrategy. I think you're going to see 5%, 10%, maybe not even higher than that.
Yeah, well, that was the conventional wisdom, right? Like if our thesis was correct around this stuff, it was kind of an inevitability that, you know, organizations would start making some kind of an allocation. Now, whether you're a hedge fund or you're a private business, public businesses were probably a little bit further down the timeline in most of our minds. But the fact that, and actually this is a great time to bring up that quote in terms of making an allocation, because he said in the CoinDesk, I believe it was, article, "This is not a speculation, nor is it a hedge. This was a deliberate corporate strategy to adopt a Bitcoin standard."
Yeah.
I mean, I don't think any of us thought we would be hearing those words at this point.
So Pomp asked him a question, and I was thinking this well before the way Michael responded, because I know how I look at my own business and how I've adopted a Bitcoin standard very similar to what he has done. And if that Bitcoin blows up, or let's just say it has a very strong sell-off with no recovery, does that impact my business operations? No. Is it going to impact his business operations for the most part? Not really. Does it inhibit his ability to make acquisitions upstream and downstream and in parallel to where he's at in order to increase market share or whatever? Yeah, it will. But as far as the product and the service that his company's providing, they're going to continue to bang out 20 to 30 billion or 20 to 30 million dollars a year in bottom line net income that they'll continue to bank onto their balance sheet and flow into whatever assets they want. That his Bitcoin position is not going to impact that. Right. And for a lot of companies on the market, they're not profitable. Right. And so he had the comment about, hey, you got to be making money to be effectively doing this. And I think that's the thing that I absolutely love about this, because for the last 10 years, we've watched zombie company after zombie company and fiat printing that has nested itself into higher and higher venture capital market series or round 32 of bidding the price higher only to bring it into the public market at a PE of 50 or higher, right? It's total crap, right? This is not free and open markets, and it's total crap. And so what I'm excited about is this thing is just going to nail all those activities to the wall. If you're not making money, guess what? You're going to have to die, right? It's just not going to work anymore. And I just cannot wait to see the stock price on MicroStrategy in a year from now. I'm like salivating to see what that looks like. The start of this year, right? And then in March with the sell-off, his stock price was at $91 in March. Today it's $174, right? And you know how much his business operations have changed? Zero. You know, in the grand scheme of things, if we're really being honest with each other, nothing has changed with his operations at his business. Nothing. And he's gone from $91 in March and he's at $174 today. And guess what? It could 10x within 12 months from now. And he still has the same $30 million net income type activities happening on his balance sheet as far as the assets that are generating revenue.
Yeah. And it's an interesting, somewhat of a side note around that, because I think when the stock pumped, I think they were up 9% yesterday on the news, something like that.
Mm-hmm.
When that happens, that's the market validating the move, obviously, right?
Absolutely.
And so I think, a ton of boards, executive teams are going to look at that and say, wait a sec. First of all, the merits of the strategy itself, right? Making an allocation to Bitcoin. Okay, that's one thing and that's separate. But on top, we're getting the gravy on top of that by the market saying we support this decision making and we're going to reward you with appreciation of the stock price. Well, why wouldn't you?
Yeah,
If you can clear the hurdles.
exactly.
Yeah,
I mean,
and
it's
and he was saying that this took them. They had all their ducks in a row, and it took them about, I think, 3 to 6 months to get everything ready to do this. And I think he insinuated that, and he agreed with what I just said, where that a lot of companies are going to be looking at it like this and expect in the next 3, 4, 5, 6 months to see, at that time when the clock has ticked forward that much, when they've gotten their ducks in a row and they're able to do the same thing, to see that happening. So, and I know you've had the ear of you've suggested you've had the ear of a few back boardroom people over the last few months. So maybe you've got some special insight into other companies that might be planning the same thing.
I mean, if you think, and this is the thing with how these boards work, is if you're on one board, you're on 3 or 4 or 5 boards.
Right.
Right. And so if you're doing something with this one company over here, they talk, they play at the same country club. They word gets around fast in that community. And I mean, just talking with Jeff Booth, he was saying this is becoming a boardroom conversation. It absolutely is. And so, and realize in the private side, where you have, in my opinion, a lot more people that have that controlling share of the business and can go into make these bold calls. You're not even going to see that. It's not even going to get published because they don't have to share their, just like my company. I don't have to show anybody what my company's doing on its balance sheet. Right.
Mm-hmm.
So,
and
yeah,
I think he said, or maybe, sorry, not he did. Was it you who published the top shareholders in MicroStrat? Because I believe is it Blackstone and Vanguard? Are they the top two?
But I don't think that they have. If you go into his 10K, you can see that the voting rights that have been stripped out, he holds a serious amount of the voting rights of the direction of the company, regardless of the
no, I just mean from a taking note perspective that they're
exactly.
gonna be aware of a move like that, obviously.
Exactly.
And
especially come January, as we get into 2021, they're going to be hyper aware,
and they got their hands on a lot of pies, right?
Yeah.
What's interesting about what he said as well was, and I think you as a podcaster with a big audience, and most of us who create content to some degree, we get the odd message from people saying, thanks, really love your work, you set me on the course of understanding this stuff, etc. And which is great, but you're speaking into a mic. At least, I don't know what your experience has been like, but you kind of forget that there are real people and real decision makers on the other end listening to your thoughts and your words and the conversations that you're having. And so Saylor said, Pomp and Parker Lewis and, Bullish Case for Bitcoin, these were some of the resources that he consulted to form his thinking on this, and which he, as you said, forwarded on to his executive team and his board. And
I mean, I share private messages with Michael, so he's talking to us. Trust me.
Right. Well,
he's having conversations with a lot of folks in the community.
So were you part of orange pilling him over the last few months? Was that a private conversation that was going on?
Nope. I think he started taking these actions before he started communicating with various people in the media space. Call it Pomp or whoever. I think he's been doing a lot of homework behind the scenes.
Yeah. And my point there was just going to be, it's a validation of the thesis, right? We've all been talking about this for a long time. We believe it so vehemently, and we're so passionate about it, and we want so much to see it succeed, not just for our own individual financial gain, and to see the exterior world really validated in a very serious way. That's cool, right? That's great. But to also validate what it is those of us who are writing, creating content, putting out videos, whatever, be validated too. That's really interesting to know that, there's leverage in these voices that are going out there. And I gotta, I mentioned that I was going to be speaking to you today on Twitter. And I don't know if you're familiar with Tahini's. It's a restaurant group in
I
Ontario,
have seen some
Canada.
of their posts. Yes.
So they came out after the original MicroStrategy announcement and said that they've done the same thing. They fell down the rabbit hole earlier in the year, and in March decided this was a good, move for their business. And then Snappa is a graphic design software company in Canada as well. And Chris Gimmer, who's a co-founder, he wrote a great blog post. I don't know if you saw that one, but it was, again, explaining their rationale for investing in Bitcoin and moving balance sheet funds into Bitcoin. And they both asked me to tell you, thank you, because it was you, I think, at least for Chris, he came through the investor podcast, and
Awesome.
the Tahini's guys, I'm not sure where their entry point on you was, but they said for both of them, you were instrumental in helping inform their decision making and pull the trigger on this. So
I'm humbled. I hope I'm giving
well,
out good
well, of
things to
course you
think
are. Of
about. We'll
course you
find
are.
out.
But well, yeah, we will find out. But that's two small examples, of course. But it proves the kind of, and the MicroStrategy example is obviously a much larger one. But just that this has a material effect. Like this conversation we're happening right now, people are using it to mull over, to marinate, to chew on, and to think about what decisions they're going to make for themselves individually and for their companies. And it's another weird, wacky element of this thing that we're all participating in.
Yeah. For me, it's just been it's been kind of fascinating to see. You can tell when somebody's really understanding really kind of the 4-year cycle. And I think the 4-year cycle part of it is it's just a fractal upon the next fractal 4 years later. And we've only seen a few of them, but all indicators after this last halving event is that it's acting very similar to what happened back in 2016 when we had the last halving, and how it takes time for the gears to kind of start setting in. But all indicators are suggesting we're going to see something very similar to what we saw last time.
Mm-hmm. Yeah, well, let's break into that, because I think whether it's just on how Bitcoin's price performance is going to go over the next 18 to 24 months, or that in conjunction with the macro economic landscape, of course, everybody's wondering, because we always want to know what's going to happen. But what's your take on where we are in the macro cycle and the macro landscape right now, and how that affects Bitcoin and how Bitcoin is influencing the macro cycle?
I don't think Bitcoin, the protocol, really kind of cares all that much as to what's going on, because I'm a firm believer that the floor of that is being driven by miners dropping the flow onto the market. So I think if you were going to fix fiat, and like everyone is now not going to print in the levels that we know are on the horizon, and you would just fix it where it's at right now, and you could say, hey, all the credit that's in the system doesn't become impaired. All the actual monetary baseline units are fixed at this point. I still think that the price is going to this next 100,000 level. I really kind of firmly believe that. And I think that it's going to be based off of the production cost for those miners that's going to drive it there. I think when people are thinking about it going up, you're almost always biased to think, well, there's more buyers than sellers. But if I could just frame something a little bit differently, I would say there's a whole lot less sellers than there are buyers, which is effectively the same thing. But I think that the lack of supply that's being dropped onto the market is what's driving that price, more so than more people figuring it out right now. I think the miners are absolutely setting that floor. And for me, the simple question I always ask myself whenever I look at a log chart for the last 10 years, and you see the shape, and you can see where it comes off. Like if you were going to draw the line on the base of that, I don't know about you, John. You've been in finance for quite a few years. Like, have you ever seen a chart that does that? A price chart that does that?
No, not over that
No.
period of
Over a
time.
10-year period of time, something that's just like this perfect Metcalfe's law shape to it. Like, so for me, there's something that is that's engineered into the code that's driving that. And so I've really tried to wrap my head around what is that's driving the price floor. I think whenever it separates away from that floor, I think there's something emotional that's driving the price beyond whatever that thing is that's holding it in there. And the only thing I can come to the conclusion on is that those are miners that are setting that price floor. I think that if early on, let's say this protocol was developed and you had the protocol get forked, a different, let's just say we have Bitcoin, right? And then we have Bitcoin 2.0 that gets forked, and the market thinks that it's even more decentralized, and that the market thinks that it provides better security than Bitcoin 1.0. I would suspect that 2.0 would take on this shape, and Bitcoin 1.0 would look more like a Litecoin chart or something like that. So I think it's very important for that price floor to continue to be set by the miners. It has to continue to be the best form of decentralized money viewed by all the market participants in order for it to continue to be valid and for that to continue to be taking place over the long term, which I don't see any type of competitor in the space that would do that at this point.
Yeah, I agree. What do you think is, this debate kind of happens periodically, or it's always ongoing. But when you say is the best form of money, has the highest level of security, there's the conversation around ossification and the things that, cannot be changed, and then the things that can be changed. And, to what degree, how sacrosanct are certain elements of Bitcoin in order for it to maintain what it currently is, whether it's a ultimately absolutely scarce form of money, et cetera, et cetera. What do you think is it that makes Bitcoin Bitcoin?
The fact that nobody can step in and change it. I mean, at the end of the day, I think that's what Michael Saylor was saying, is if he felt like there was an entity that could come in and control the code, then there's some serious concern there. And how in the world are you going to offset all the node operators? If you're running a full node, it's effectively voting rights of a business. And it's the same thing. So, I cannot think of any way that can be disrupted. And I think that what this entire thing is about it's about decentralizing and taking the human out of the loop for what we've seen in the manipulation that we've seen through central banking policy. I think everybody's going to come to the realization here very shortly as to how destructive that is when you manipulate it for that many decades, what type of destruction that's going to actually do. And I think the market is just going to say, we need something where there is no human controlling this thing and that no one can step in and manipulate it. That has some serious staying power as far as I'm concerned.
Yeah, Breedlove coined the term, or brought the term, the incorruptible substance to his most recent article on Bitcoin. I thought that was a really great analogy to make, and hopefully an accurate one.
And I don't want to discredit the fact that you have a fixed baseline of supply, a known issuance rate that then stops. And so, I mean, that's the polar opposite of what we have today. And it's the polar opposite of Ethereum as far as I'm concerned.
Right. And as far as you're concerned, in the discussions about, well, should we introduce some degree of inflation for miner rewards in some future theoretical time? Obviously, the answer is absolutely not.
Let me ask you this. So from like I buy stock, you buy stock, right? What problem are you solving that is broke in that structure. You can say the fees are high. I guess you could go that route, right? But Robinhood, there's no fees. You got some high frequency traders that are, but as an individual, that doesn't really impact me if I'm buying stock for free on Robinhood. So like, what's the problem that you're solving with these smart contracts that you can't already get in the marketplace?
Oh,
right?
smart contracts. Yeah.
That's where I'm going. Like I'm going on an Ethereum.
Okay.
So like,
go for it.
For me, like, if I'm gonna buy something because I feel like I'm solving a problem, like when it comes to Bitcoin, we're solving the central banking total delusion of the value of currency and the buying power. Like, I get it. Like, I understand what we're trying to achieve, but what are you trying to achieve with the smart contracts? The decentralized finance. Well, why do I need to be able to issue tokens of stock? And okay, I just lost you for a second. I thought I dropped off. Why do I need to do that? Like, what problem am I solving? Well, I mean, yeah, you got a centralized entity that's managing your stock certificates, but when has that ever been a problem? Right? I've never had E-Trade run off with my stock certificates and say, "Hey, I'm not giving them back to you." Right?
Yeah.
So what are you solving?
I'm totally the wrong person to ask because I spend so much little time. I know what you're saying. It's a rhetorical question, but like I
don't have an answer to it.
Right. And so, that's the issue.
That's the issue. So like if you're not solving a problem, then what the hell are you doing?
Yeah, I agree. And the other thing that I often, when I get into these discussions, is what Bitcoin is attempting to do here is so damn important and valuable.
Yes.
Like, can we just, and I feel like if you start focusing on far lower, and let's say there is some kind of problem that smart contracts on Ethereum are solving for some people. Which
they will. Yes.
Right. Let's just say that for a second.
Yeah.
It's so much lower down, so far lower down on the rung than, disrupting central banking. So
Amen.
like let's keep the main thing. And once we nail that down, who knows what comes after that. And the same is true for, it was true for the people, the big blockers back during that time and saying like, well, I can't pay for coffee with my Bitcoin. Like, guys, first of all, that's not a problem. Yeah. Like nobody has a problem paying for their coffee. What we have a problem with is the institution of central banking and how their cost-free creation and control of money is putting a huge damper on effectively humanity, in many different ways. So like, can we not come together and focus on that? And we'll worry about all the fun stuff later,
There's going to be stuff that pops out of that technology. Do not get me wrong. Like,
for sure. Yeah.
The whole decentralized contracts, I get it. There's going to be a use case for this for sure. But today, I don't see. Oh boy. And your point about the cash thing, like you get on the Roger Ver route and it's like, why do I have to be able to go and buy a cup of coffee with this? The system we have right now works. Like that's not the problem.
Yeah. And, and this point might be a little bit more contentious for some, but I think people of that mind, as Roger, you just mentioned, fail to realize that changes of that nature of these fundamental things like block size and hard cap, etc. Like once you change those things, I feel like it slips through your hands. Like it's lost. The kind of the magic of it being unchanging is gone. And you've kind of corrupted the incorruptible substance, as it were.
The problem and I think this is why for me, it came up on my radar a little earlier, just because of how I was doing valuations on businesses, right? Because it all comes down when you're doing valuations on businesses, this Warren Buffett style of investing, it all comes down to the cost of capital and then what premium you're putting on top of that risk-free rate to account for the risks associated in the business. So I could see the trend and I could see the manipulation that was happening and how the central banks weren't allowing the market to function in a free and open manner. And then you look at the trend that the 10-year treasury is taking towards zero. And then you look all around the globe and they're already at zero and they're negative, and you're starting to scratch your head and you're saying, hold on a second. How in the world can I possibly come up with a valuation on this business if there's no risk-free rate? Like, the cost of capital is zero? How is that possible? Right. And so everything was just, for me, when I'm trying to do these valuations on businesses and I'm estimating the future free cash flows, and I'm saying, okay, I'm going to discount this back to today's rate and I'm going to come up with this valuation. And you're looking at the valuation, you're saying, this doesn't make any sense. What in the world is going on? And how is anybody else doing this right now? Because you might as well take your finance book and just burn it from the university, because it's total trash at that point. And if you have a discussion with a professor, they just nerd out and say, well, maybe your cost of capital is 0.01. And you're just like, dude, what, are you an alien? Right? Like, how can you possibly say that and believe what you're saying right now?
I think the answer to that is a lot of these people are so their thinking is so ingrained in the way this system has operated for so long that whatever it shows back at them is by default fine and normal and just something to be contended with.
They've never run a real business.
Well, that's it.
They've never created real value in the marketplace that they own the equity of. And that's what, for me, that's what it always comes down to. Because it's like, if you were creating real value in the marketplace, like Michael Saylor is a perfect example. Here's a guy, he's making $30 million a year, like profit, right? His top line, I want to say, is like 500 million, right? His bottom line, $30 million. He's banking it right onto the balance sheet every year, right? He's creating real value that the market is putting a premium on and paying a profit on top of, for the service and the product he's providing, right? So now he's sliding that over and putting it on his balance sheet, and he's saying, all right, now how in the world can I protect this or make this grow for me, right? That's how somebody who's actually generating value in the marketplace thinks. They're not thinking about some CAPM model of volatility of this particular, 3-letter ticker compared to the volatility of the market, and then coming up with some, bird brain like valuation off of it. Like, that crap is for somebody with a book, a ruler, and a pencil, and not for somebody that's actually creating real value in the marketplace. And so that's why when you find people that have a substantial portion of the equity and the voting rights remaining in their company, that they founded, that they actually created value, they get this so fast and so easily because they're looking around and saying, this is nuts. How can I compete against a company that just gets free handouts and never has to produce a bottom line? How do you compete with that? You're incentivized to just you're incentivized to take even more risks and not create a bottom line. It's nuts.
Speaking of nuts, did you catch any of Jay Powell's speech?
Dude, I can't even watch
QAs today.
I can't even watch it anymore. I mean, why watch it? It's just going to be total quackery, right? I guess.
Well, I watch it, to be honest with you, I watch it for that, because, a part of me is devastated that this is the state of the world. But the other part of me, knowing that, we have something to fight, quote unquote, fight back with, gets some perverse enjoyment out of watching just how absurd it all is.
Insane it is. Yeah. I guess the comments, I saw some comments on Twitter, but I guess he basically came out and said that we need more fiscal spending so that we can buy that debt. Right? Like, I go back to the husband and wife example, right? The husband's out there spending all sorts of money and the wife's the one's paying the bills, and she's saying, hey, we need the interest rates to be even worse than what we're doing. And like we're going to increase inflation, right? Which guarantees that your interest rates are going to go up, right? Like, what wife would be telling her husband their means that we need the interest rates to go up? Doesn't even make sense what they're saying anymore. It's just,
what I took from it was, in years past, the Fed chairwoman was typically, you had to kind of interpret their intent. Like, they would use words like dovish or restrained or et cetera, et cetera. And you would kind of infer what their forward-looking behavior was going to be like.
Yeah.
And what I took from I only watched 15 minutes or so, but I think I got the meat of it. He basically said, we're going to target a higher rate of inflation, 2%, maybe overshoot. But we're going to keep, rates low, and we're going to, have very supportive policy. And he kept using this terminology until I think 2023.
2023 is the tweets that I was seeing.
Yeah. And so he, and he was emphatic that like this was a very accommodating policy for far more forward looking than they typically give, until the year 2023. And so, to me, and I wasn't surprised to hear that, it seems incredibly desperate to me. He's trying to signal to the market,
totally,
we're going to be as supportive of as we need to be. So you guys, borrow, invest, do what you need to do, because we're going to just, put a syringe in your arm and jack it up as much as we need to. That was my interpretation of his remarks.
I don't think there's anybody with a decent size of money in the marketplace today that's just not looking at the central bank policy and saying, all right, this is clearly trending in a disastrous direction with no end in sight. But what can I do in the short term to make sure that I continue to, increase my buying power and play the game? Because obviously the music hasn't stopped.
Yeah.
And so that's a dangerous place to be, especially if you don't understand Bitcoin.
Oh, totally. But this is one of the things that I've been thinking about is, and I'd love to get your take on this, and also the kind of inflation deflation conversation that's going on. But it seems like we've been detached from economic reality. So the markets have obviously been detached from economic reality for some time, and it's been so much more obvious during the crisis than before. And a lot of people think, well, the Fed's going to inject a ton of cash into the system, and we're going to try to, supercharge or, weekend at Bernie's sort of this recovery, and, get the corpse rolling again. And, maybe it'll be a really weak recovery until there's a vaccine, and maybe it'll pick up some steam. And I just can't shake the feeling that people aren't considering the degree to which small businesses and commercial real estate are going to be severely impaired, and there's going to be a lot of insolvencies. And at some point, does that reality not have to influence all the other things that people are intentionally putting blinders on to focus solely on? But will the damage in those sectors not show up in the markers that the Fed or the typical finance people are looking at? And basically what I'm saying is, like, do we not see, in addition to the macro fragility of the system, do we not see kind of a larger scale, unexpected, like severe downturn in the short to medium term? Because it's hard for me to imagine that we don't see that, and we just kind of restart 2008 the way we did back then, just on a larger scale, and we kind of putter our way ahead until whatever happens in 10 years' time.
I think that you continue to see these policies play out until the market can spot an opportunity for an exit hatch. And the exit hatch has to be an alternative currency than what's being used, right? I don't suspect the game theory on governments coming to the table to hold themselves fiscally responsible as a real exit hatch. I think that's a talking point that lives in fantasy land.
Sure.
And everyone who's listening to this knows where I'm going, right? Because there's, in my opinion, there's one alternative that's going to emerge as this thing that the rest of the market's going to spot and say, what the hell's that? Why is that doing what it's doing? And then they're going to do the homework, and then the rest is going to take care of itself. I think that what we've seen to date could have been drug out way longer than what we saw. And I would describe this as being drug out since really kind of 2008. the markers, the trends in interest rates since 1981, and then by the time we got to 2008, your federal funds rate was in excess of 5%. So everything still seemed like it was operating normally, and that you could have had the potential for this to kind of start going through another reflationary period like you saw from the 40s up until the 80s. And maybe it would have been reverted without any type of social unrest. But I would argue after 2008 till now, it's been very clear that the central banks cannot allow this market to crash, or else everything comes unglued. So how I think that they could have extended it even more than the 12 years that we got out of this, because they've pulled one lever for 12 years. That lever was insert liquidity via the bond market. And if I was just going to say top or bottom, we're inserting liquidity to the top. We're going to drive asset prices up. And that's how we're going to continue to provide liquidity into the game. If we were playing the game of Monopoly, I like to use that as an example. If we were playing the game of Monopoly and we were the banker, we keep going back to the person who's winning on the game, who's really kind of achieving monopoly at that point, and we're stuffing the cash into their hands with this idea that we think it's going to trickle down to the other three players, right? And it's not. And so how they could have drugged this out even longer than 12 years, and it might go longer than that, but to date it's been 12 years, is they should have been doing the QE, and then for a couple years, and then they would do UBI for a couple years, and then they do QE for a couple years, and then they do UBI and they needed that balance between the two, because you would have got inflation if you were doing UBI at the same levels of the units you were putting in via QE. If you were doing that much UBI down into the population, you would have, trust me, you would have got your inflation, right? No doubt about it. I mean, just look at the meat prices over the last 9 months since they did that one check, right? I mean, it just went straight up. Yeah. So, if they would have had that balance, I think they could have taken this thing out for 25 years or something crazy. Who knows? But the fact that they pulled that lever for 12 years straight, they drove the interest rates down to nothing. And now they're saying, oh, wow, people are literally killing themselves on the street and we got social unrest. Maybe we should do a little bit of UBI, right? And then once they turn, and what I think people don't understand about the implications of UBI is, as soon as they go down that path, and as soon as the CPI gauge starts coming in, because you're pushing the money down to the bottom, right? The CPI gauge starts demonstrating quote unquote inflation for the gauge that they're using to measure. They're measuring inflation with this, right? There's just these couple things in this little basket. Once that starts coming into play, well, what happens to interest rates? Or what tries to happen with interest rates? They try to go up because there's a premium above inflation, is how the fixed income market prices itself, right? So now they're forced to step in because they can't allow that to happen. They can't allow interest rates to go up, or they can't afford the fiscal bill, right? So now they have to step in and they have to do more QE. So if they start doing UBI right now, after they smush the interest rates down to zero, they're forced to match all that UBI with even more QE in order to keep the interest rates at 0%. So it's crazy. I mean, it's just printing. They're doubling down on any printing that they do in the UBI front. They're going to have to match it in the QE front, which, if you were doing it like in tandem with each other and in parallel with each other, I think you could have stretched it out even further. And I'm not suggesting that's what they
No, of course.
You're in an end game, right? 2008 was the end game, and now it's just all the manipulation in order to keep social unrest from actually playing out.
Yeah. So, I mean, how do you see it playing out from there? Knowing that that's probably the playbook, right? And knowing how much unrest there's been just in this short amount of time. And not solely looking at that, but that as a proxy for how broken the system is becoming and how rapidly it's becoming so. I mean, the election is coming up in November. Like, how do you see this playing out? Like, I get that the end game is, and let's the caveat here is a shitload of people don't ever look at this stuff. I think it was even you who commented it on Twitter or something today that, you know, there's only a tiny, tiny, tiny portion of people that ever look at something like the CPI, even as flawed and ridiculous as that is.
Yeah.
So a ton of people are not only going to misdiagnose the problem, they're not even going to be looking in the right universe for the problem. And so even though I think you're right when you say, you know, people that do look, the case for Bitcoin is becoming stronger and stronger. And the more people like the MicroStrats and the Sailors of the world come in and validate that thesis, it's going, and the Paul Tudor Jones, it's going to make it so much easier for, you know, the quote unquote smart people that are looking at the stuff to say, yeah, it makes sense. 5%, 10%, 50%, whatever it is, that's a different story, but it'll make sense. But for a shitload of people, they're going to be actively directed away from it by governments, et cetera. And that in conjunction with them not having any kind of interest, inclination, or education around it in the first place is going to mean they ain't getting a piece. So, you know, how do you see this playing out over the next 6 months, 12 months, 24 months?
So the big crash that we had in March with the stock market, I think it was the most aggressive drop for the time span and the percent move. It was like the biggest slope down that I think we've ever seen.
Yeah.
I think that if they don't continue to do UBI fiscal policy down into the masses type activities like they did back then, you're going to have another event like that. Now, when it happens, I have no idea. But I think that policy error, that fiscal policy error, is going to manifest itself again. It's just the rate at which, you know, it's almost like a pregnancy. You know, if your wife goes into pregnant, if she's delivering a baby and she's there, it's like every 2 minutes, right? The contraction happens. Then it goes to 1 minute. I think what you might see in the market is whatever that tempo is. I don't know, but if it's on a 6 month basis to an annual basis, you're going to have another major drop and liquidity of it, because it's a liquidity event is what it is. It's impairment on balance sheets. It's the derivatives market blowing up alongside of debt exploding because it's just a promise. And so you have that impairment of those promises that all feed on each other like a water wheel. So like once it starts spinning in one direction, it does the exact same thing when it goes the opposite direction. So when you start getting impairment, that compounds. Like if I owed you money, well, then you owed somebody else money based on that promise, they unravel themselves. I think that you're going to see something like that play out to the same magnitude, if not worse, than what we saw in March. And the governments around the world, not just in the US, governments around because this is all based on the pegging of all currencies to the dollar and going back to Bretton Woods and all that stuff. So I think you're going to see governments around the world have to step in, do a massive amount of UBI, which then is going to have to be followed up by a massive amount of QE in order to ensure the interest rates don't go up. And I think what you're going to have in the backdrop, based on what you and I believe is going to happen with Bitcoin, you're going to have this thing that looks like a rocket that's shooting to the moon in the background that's completely decentralized. All those easy narratives that we talk about are going to be popping out, and people are going to be saying, okay, so this has been happening for 10 years and you used to be able to buy a pizza and now you can buy a Gulfstream, whatever, with the same amount of Bitcoin just in a 10-year period of time. Like what the heck is happening? Why are all these tech companies putting this on their balance sheet? Why are a few tech companies 10xing in value? What in the world is going on? Are we witnessing hyperinflation in Bitcoin terms? And that's when I kind of suspect that's when the bond market's going to play a massive role, because all these people are sitting in this debt that's yielding literally nothing. It's yielding negative when you account for the inflation. It's yielding a negative return. You're guaranteed to lose money. You're guaranteed to lose buying power is how I should phrase it. And people who are guaranteed to lose buying power are going to look for alternatives, especially when they're in triple digit returns, quadruple digit returns.
Yeah. And so back to kind of the bifurcation between people that are aware of these sort of processes that are at play and the means and tools available to mitigate, how much it negatively affects them. If we put Bitcoin into the pile of all the other tools that had previously existed, right? So over the last 10 years, if you were wealthy and you were somewhat savvy, then you put your money in the stock market, you win. And someone who is not savvy and doesn't have a lot of extra cash, they just hold cash and they lose, right? If presumably I know we like to say that Bitcoin is a wealth transfer to the fill in the blank, the curious, the millennials, the whatever. But the fact is, it's basically just the same process, maybe a larger cohort of people saying that because they're paying attention, but there's still just a cohort of people that have the means and the awareness to use a tool in order to protect themselves and financially benefit from what's coming. There's still going to be a huge cohort that isn't, right? And so I think ultimately Bitcoin changes the world. I think it's a massive force for hope and good in the world. And that's why I'm here talking to you. And that's why I love doing all this stuff. But I think until it gets to the point where it's de facto, where it's just, you're born and it's the money you use, or it's underpins the money you use, you don't even think about it. The fact that it requires kind of concerted effort to understand and engage is going to mean that there's a big cohort of people that are left out. And it's that cohort that concerns me, right? Because it'll be a large cohort and they'll be increasingly disenfranchised and impaired by the existing system and how it functions and how it treats them. So
so the transition period is not going to be pleasant. There's no way it can be. In my opinion, I don't see how a transition period of something of this magnitude can be pleasant. But I don't think that, think about it. If people see this as the new standard of value, they're going to demand that they're paid in it. And if you're a business that's not profitable, you're not going to be in business. So I think that part of it is where so many jobs are dependent on the printing press right now. And so when that goes away and the cost of capital is back, because that's what's going to prevent, I think, a lot of investment here in the transition period, is people like you and me that are holding these Bitcoins now are looking at the opportunity cost or the risk, and there's a real cost of capital for our investment, for those Bitcoins to be chasing investment opportunities. Like, it has to be one hell of a return for me to give up my Bitcoin to invest in something that is somehow going to outpace the return that I'm just going to get by owning that currency, right? So what that's going to do is it's going to force companies that don't make money to go out of business. Those people who used to work for those companies are going to be out of a job. They're going to be looking for employment opportunities. And the people that are working for a profitable company that still have skilled labor in the marketplace are going to demand payment in Bitcoin. They're going to bridge that transition a whole lot faster than the ones that aren't employed. You can't, as an as a guy who did engineering and aerospace engineering, right? You can't have lift without drag. It's impossible. Like, for every time you work out a lift equation on designing an airplane, guess what? There is a drag equation that's right there along with it that has to be performed anytime there's lift.
Yeah.
And so what I would describe as what's happening in the marketplace is, long term, this is going to be revolutionary of what's taking place. But that doesn't mean that the transition is going to be a pleasant experience.
Totally. And two questions off the back of that, but this process and the ability for the existing system to continue operating in the way that it's been operating, how long do you envision that them being able to do that, and in such a transition? And I think we touched on this last time, but it's becoming more relevant by the day to ask this question: is what kind of considerations do you have for basically making sure that you don't get caught in the crossfire, as it were, during this transition?
So I think my base case is it's going to happen faster than the market thinks.
What's that mean?
What's your time? What's the date? It really comes down to if the stock to flow model is accurate, and we are going to 100,000 plus here in the coming year or two. I just think that it's going to be an awakening in the marketplace as to something's up. And I think that it's going to cause a migration over to a standard like this faster than people are thinking. So, I mean, that's my base case. I just don't know how you're going to be able to keep the lid on this thing is really where I'm at. And I think that what's equally as important with that is the opportunity cost of everybody in the market to make no return, to make a negative yield buying power return, is just amplifying the desire to come over to a something that's very shiny and looks like an opportunity. You know, when you look at when you go back and you look at the 1920s in Germany and the gold chart when the currency failed, it happens pretty aggressively. I just kind of suspect we're dealing with something like that, but on a global scale right now.
And as to the question about kind of how you insulate you and your family, your loved ones from the chaos of a transition, what kind of considerations do you give to that?
So if you're sitting on a lot of Bitcoin, I think you'd be really dumb to go out and just start buying a bunch of things. And like, let's say you start making a bunch of money, this thing goes to 100,000. You go out there, you're like, oh my God, I'm going to buy a new house. I'm going to get that car I always wanted. I think that's a very stupid strategy. I would play this. I'd lay very low, probably a whole lot longer than you want to.
And do you ever give consideration to being a vocal voice about this stuff? And, you know,
I think we're already checking that block, right?
Well, no, that's what I mean. That's what I mean. You know, I guess you've crossed the Rubicon and that's just the way it is, right?
Yeah. But I think, you know, if things got really crazy, yeah, I would disappear. I would not be on the net or whatever. Right. I mean, my specialty is actually in military operations, not in finance.
Well, that's why I'm asking you.
Let me tell you, I am much more prepared in that realm than I am in the finance realm.
Well, I want to ask if you can give any of that away, but I assume most of it is held pretty close to the chest. But if you were an individual with holding Bitcoin and who had the optionality to be mobile, you know, if they needed to be with themselves and their family, what are some of the top considerations as a military-minded person that you would be hoping they would have?
Be quiet. Shut your mouth.
God damn it.
Don't do anything that's ostentatious. You know, be prepared for pretty much everything. And mentally prepare yourself to do some crazy things, I guess. I don't know.
Oh, I like that last one. I wanted, before we move on from this topic of kind of macro outlook, I'm just curious what your thoughts are on it may be ultimately moot, but the inflation, deflation, dollar strength, dollar weakness conversation. Obviously the dollar has been weakening over the last few months. Do you think, you mentioned the possibility for another steep liquidity crisis. Do you think when things get, if things get increasingly hairy, do you think, the market in the medium term, before they kind of wake up to something like Bitcoin, do they flock to the dollar just as a traditional safe haven, liquid store of value in an uncertain world? Or does the dollar continue to weaken?
I mean, when we say the dollar is weakening, we're saying it's weakening relative to other currencies. The other currencies are then going to weaken, and then it's going to strengthen the dollar. Like that whole revolving door of it being strong or weak is just going to continue to become more competitive. And that's why I guess I don't really have too much of an opinion about how strong or weak the dollar is going to be in the coming 6 months or year, because it's just going to continue to be this rat race of competition amongst other countries and their currencies to continue to devalue. and I have no idea what those policy decisions are going to be, or how reactive some of those policy decisions are going to have to be based on fiscal decisions that are beneficial or poor performing for that domestic country. So when I look at Bitcoin's performance relative to, you name it, fiat currency, that fiat currency is going to get annihilated relative to Bitcoin in the coming 12 to 24 months.
Mm-hmm.
That's my opinion. That's my base case.
Right. Has the last, and I know you've been into Bitcoin for a while now, but I get the sense that probably like all of us, with each passing month, the conviction increases. And because I remember first hearing you on a podcast, I think in early 2019, and you're obviously insightful, informed, as you often are, but it feels like everyone is becoming more convinced of this narrative and convicted as we move forward. And as you said already in this discussion, there's few things that are going to outperform Bitcoin right now, and you have to consider the opportunity cost of anything that you do versus holding Bitcoin. And so, as someone who's built a media empire on talking about investing, and someone who presumably does a lot of it personally, are you in kind of a Zen state right now because you have such a main thesis? And is this like the biggest main thesis of your career? And are you, like, from an investment perspective, are you just kind of locked in and waiting to see how things are going, and then of course working on your business? Like, is this you know what I'm saying? That may be a weird way to word it, but
I think the thing that's changed since the start of the year is COVID had a huge impact on speeding up the timeline.
Right.
Because that was like trying to run a race and tripping and falling in during the race. Like you're gonna accelerate your place in last in line. And I think that the whole COVID thing just expedited the whole timeline of all of this. The other thing that for me became way more bullish is really all the Caitlin Long stuff. I always had kind of concerns as to how the government was going to really kind of treat this when it really started getting hot and heavy. And I'd say we're there right now. And like today, Kraken, chartered bank.
Big news.
It's crazy.
Mm-hmm.
I mean, that the news there is just every single person that said the governments are going to regulate this. I don't know how you can possibly respond to today's news with Kraken. The other big news is that big, large banks can do the same types of stuff, just as long as it's not their primary revenue stream. So all of these things, all of the arguments that for me were big concerns on the regulatory front have actually been the exact opposite in 2020. And if you would have told me that in 2017, that this would have been the case that was playing out, and Bitcoin was still at 10,000 or 11,000 or whatever it is, I would have, I don't know that I would have completely bought into that. I would have probably called you a liar. I wouldn't have suspected that would have been such a slam dunk win in this direction for the Bitcoin space. So there's a couple things that have changed since the beginning of the year that for me has really kind of amped up the argument. And I'm seeing a risk by holding a whole lot of other things and a lot less of a risk in being in Bitcoin.
Yeah. Yeah, I totally agree with that assessment. Do you think, talking about the government, and, perhaps you're right in saying that the regulatory risk maybe is going to turn out not to be as large as we might have thought. Now, it's still, in the large scheme of things, it's early days, but at least at this point, it seems like there's more tailwinds than headwinds. Do you think from a competitive perspective with central bank digital currencies? Now, obviously, I'm not comparing the central bank digital currency on its face to Bitcoin, but I'm saying, kind of from that perspective that we were talking about earlier of this bifurcation, do you think that buys them any time because of the agility that a central bank digital currency the increased functionality and ability to manipulate things that provides the government and the central bank, does that buy them time in this process at all? Or do you think, Bitcoin just still melts faces and causes everyone to move over in the next cycle?
So, I was adjusting my volume and now it's way too loud. Is that loud on your end?
Yeah, you're good. You're good.
It's good. Okay. So, this is where it's really important to go into like level 2, level 3 critical thinking on that idea. So you're talking about the agility of state issued tokens and the fact that they could potentially program it so that it could be spent once, or that it could be kept within the geographic area of the United States and can't be sent overseas. Like all these things are important ideas that could keep the manipulation going, because they could just issue it stateside and do these things. Where I think it breaks down is when you start going into the level 2, right? So technically, look at the challenges that are happening over on the Ethereum side as far as programmable contracts and how difficult that is. And this is a free and open market. And you have some of the smartest engineers working on that technical problem. And now all of a sudden you're saying that we're gonna have a government entity through an acquisition process step in and hire a contractor, because there's no way the government has programmers that are going to do this organically. They'd never do that. They would hire a contract. They'd put some contractor on contract, some defense contractor or whatever. They'd put them on contract to develop a token that then can do all these things. They're going to somehow prototype that. They're going to test it. They're then going to roll that out without any errors or mistakes into the open market. And we're talking about money here. We're not talking about something that can and cannot work and it's not really a big deal, right? How does it work if I get this token and I spend it with you, but then it doesn't necessarily manifest itself onto your balance sheet because it disappears after so many spends? How do like, you see where I'm going with this?
I see where you're going.
So then you're talking about a balance sheet that has tokenized money and it has the old kind of money on it. And the tokenized money can only be spent with other vendors that are stateside. So then you get into, dude, when you start talking the technicals of that surface level argument that you hear some people talking about as far as like state issued tokens, in my opinion, it falls apart immediately. I think the timeline for getting something like that in a production level implementation into the market, years. That's not happening. And like, it would take the government at its fastest probably 6 months to just put somebody on contract to start working on it, let alone the actual development of it, which would be, and then you're saying that you're at the technical maturation to even do it, which I think is the first argument I was making, which is look at what the open market's trying to do as far as smart contracts with the money right now. And like, so now what they could do is they could do like we saw, I forget which country it was with Liquid, where they were issuing tokens, domestic tokens over Liquid to put money into the hands of some of their population, which it was one of these island nations, I think, down in the Caribbean.
Remember.
Right?
Yeah, I can't remember which one.
You could see that, but I mean, at the end of the day, I think that just adds more validity into Bitcoin, I guess.
Right. Well, so do you think do you think the ultimate scenario, and probably sooner, as you keep saying, than most people might imagine, is government capitulation? Because I mean, one of the things to consider is that if the stock to flow model holds up, and I do want you to put a few more words on that, because everyone loves to hear Preston talk about the stock to flow model and breaking the stock to flow model to the upside. But if that happens, if it even approximates, staying on in line with the model, you know, a lot of Bitcoiners are going to be fairly well capitalized. And I think a lot will probably become involved in the political process. And the reason why I think that is relevant is because early days, most Bitcoiners didn't think, the government would capitulate. It would kind of be like a dirty fight, and one would have to win and one would have to lose. But in an environment where, there's so many people with a certain ideology that are capitalized, perhaps it's the case that enough, people get voted in or put into office that this becomes a popular political move, and it gets pushed through that way, and maybe we avoid a long drawn out battle. What do you think? Do you think the government will capitulate just because they just simply can't compete? And how does your assessment or expectations for the stock to flow model play into that?
So I thought today's announcement with Kraken was interesting, that you saw the governor of the state tweeting about it. So what does that tell you?
And Texas has a Bitcoin friendly governor now as well.
So what's fascinating about our country is you have competition amongst the states, right? With all the stuff that Caitlin's doing up there in Wyoming. And they have other states that are saying, hey, what did you guys do to get this passed? And they're like, I don't know, figure it out, right? They're in competition to attract that capital into their state. And so if you're a state government and you're saying, well, why aren't they telling us anything? And why is this governor tweeting about this crypto regulated bank in their state? And what is it that we're missing right now? I think you have this competitive piece that's going to happen at the state level, especially because some of these states are in debt up to their eyeballs, and with a fiscal trend that's just taking them off the charts, and they don't control their currency. So I think what could potentially play out is you might start getting this competition amongst the states that then's going to trickle up into the federal level, that could potentially bridge the gap for elected officials just being more open to what's going on. I think the one thing that has to be part of the conversation, but doesn't guarantee that it'll be part of the conversation, is just the game theory amongst nation states, that when you show either you're first or you're last on this one, and you do not want to be last. You do not want to put a policy in place that makes you the last participant on a global scale. Because boy, if you're wrong about it, you're gonna pay the price for decades. And I mean, look at India right now. It looks like, I think I read something where they're reversing their stance on it. China did a 180 on the way that they were dealing with it. Who knows what their real strategy is versus what their public strategy that they say it is. I kind of suspect it's more aggressive for the accumulation of Bitcoin than what they present publicly. And there's very little evidence, no evidence for that opinion. That's just me speculating. Mm-hmm. But hopefully we have here in the United States, hopefully we have elected officials that are smart enough to understand the game theory and not wanting to be the last one at the table. But who knows? We'll see. It really comes down to who's in power at what time, and how much critical thinking they have under their belt to be able to ask the hard questions of themselves and see the direction that everything's going. But I think the fact that you have technology eating the world, and this just happens to be another technology type thing that's now eating the world, is hopefully going to give them enough clues that they better get on board.
Last question before there was a couple Twitter questions I want to hit you up if you've got the time. But what or two last questions actually, with the stock to flow model and how you see the price action playing out. I've heard you say before, and you may have even said it in our last conversation, that part of you, let's say 51%, thinks that it may break the model, but to the upside, which means it may not conform to the model's pricing, but it may not conform because it's higher than what the model is expecting. If that were the case, does that insinuate or suggest that it wouldn't kind of follow a boom bust sort of cycle anymore, and it would just slowly trudge upward as, you know, players from all areas of the world flood in?
For the model to continue to play out in the cycles, you're effectively saying, whether you believe it or not, that you believe fiat currencies are going to continue to play a role, and that the market's going to continue to want to use them for economic calculation.
Yep.
I don't know how that's going to be possible. Like, how am I going to be doing economic calculation, meaning I'm going to go out there and I'm going to assess the value of a business when my cost of capital in that fiat denominated currency is negative, right? Especially as I'm watching this thing just go off the charts over here, because I just don't know how that would happen. So it's like when in Germany in the 1920s, when the currency failed, it failed. It wasn't like it was hanging around for decades and it was still being used. The reason it was useless is because if you went down to the store and you bought something, you had to take literally a barrel full of money. And by the time you got there, you needed 2 barrels of money to buy something. That you couldn't do economic calculation anymore. It was a failed currency. So it really kind of comes down to that. If the market if they can somehow manage to do MMT and these negative interest rates and digitize all the money and like all those things, which I think they're going to have to do in short order, maybe they can pull it off. I don't see it, but that might be my bias, right? I
yeah, sure. But if you're correct, then that would suggest that, you know, this cycle we see that breakdown of the existing fiat currency systems and far greater adoption and use of Bitcoin within the, you know, let's say by having 2024.
Yeah. You know, it's so far out there, and I think so many things have to happen between now and a year from now. Like, I think there's going to be a lot of things that play out. It might be worse. It might be actually a lot better than what I'm kind of anticipating out of the market. I don't know. So, it's a fun thing to talk about, but in reality, as far as positioning yourself or making any type of real like financial decisions around that, I think it's way too early to even really kind of dig into it more than just kind of the surface level ideas. And I think it's just more of a fun conversation more than anything.
Yeah, totally. People love to hear bullish stock to flow conversations.
You know, the thing that I toy with is I'm using the previous 4-year cycles, basically a fractal, right? I'm looking at the last 4-year cycle and I'm saying, hey, I think this fractal is going to replicate itself on this 4-year cycle. I think that when you look at the speed at which you had the bull market on the last fractal, it was the first 70,000 blocks was pretty much where it really performed that bull market and overshoot of the stock to flow valuation. I suspect you're going to see something similar, but that doesn't mean that you would see it play out in that same first 70,000 blocks. Maybe it's 150,000 blocks. I don't know. I tend to believe that I think this is a little bit of the engineer in me coming out. When you get into vibrations and how things function, when you have this repetition that it happens at the same exact interval, and for this, the protocol is exercising this 4-year interval. The oscillations that happen inside of that interval, as long as it is consistently hitting at the same interval, it finds a kind of like a systematic rhythm to it. So when I look at how the cycle played out in the first 4-year block of Bitcoin's history, your stock to flow was adjusting at such a fast clip that I think that you had like 2 spikes inside of that first 4-year cycle. The second 4-year block is the one that I'm matching to this one here, where I'm saying I think it's going to be the first 70,000 blocks. You're going to have an overshoot and then it comes back. And whether the overshoot just keeps on running or not, who knows, right? But I think as far as like a planning factor, if you were buying options or whatever, I'm kind of using that as my base case. And as of right now, the stock to flow seems to be on that exact same glide slope as the last 4-year cycle, as far as percentage wise, from the halving to where we're at. It seems to be taking a very similar approach. That percent would take you to roughly 20,000 around Christmas, and around Christmas to January timeframe, somewhere in there at the start of 2021 is when you should be making the previous all-time high of 20,000 and getting ready to go higher. So if that doesn't play out, then maybe we're looking at a bull market that's going to take longer than what we saw in the last one, for whatever reason.
Yeah, I think that's a big question, right? Because some people think, will it conform to the intervals of the halving and the stock to flow model, or will the economic mass of each incremental quote unquote cycle, or as the economic mass increases, will that prolong the bull market because it's bigger? You need more capital now to have an influence on it and to really push the price higher.
I just found it fascinating that on the last 4-year cycle, in that 4-year cycle, there's 210,000 blocks. And if you break that into thirds, that's where you pretty much saw what I found quite fascinating. The first 70,000 blocks, the price, your bull market came to a head, right? It was at its all-time high. 70,000 blocks later, you were hitting your all-time low. 70,000 blocks after that, which was your next halving event, the price was literally on the stock to flow of like 8,600 or whatever, like right on it. So I found that fascinating, that 70,000 blocks peak, 70,000 blocks bottom, 70,000 blocks on the money, ready for the next 4-year cycle, next 210,000 blocks. We'll see if it plays out. I don't know.
We shall see. All right. Last one before the Twitter questions. What's the most exciting thing on your mind these days? What's taken up, the most of your mind energy, whether it's an intellectual rabbit hole or, what are you chewing on the most these days? Could be anything.
I don't have a good answer for you. I don't have a good answer for you. I'm heavily consumed in the markets. I just love finance. I thoroughly enjoy them. I really enjoy doing calculations of what a business is worth. And so that's probably why I have such an attraction to the financial markets. I really enjoy just reading books and trying to educate myself. I have a fascination with biology. That doesn't mean I'm all that great at it, but I really like the complexity of it. I like to try to break it down into easier, understandable, digestible ways of looking at it. Kind of a mechanical engineering kind of mindset to biology. That keeps me very busy. I'm obviously very involved with my family. They keep me, very busy. But yeah, I think that's a lame answer. I don't have anything really too exciting for you, man.
All good. All right. So a couple questions from Twitter, and actually the family one is relevant, and of course only share as much as you're comfortable with. But a lot of Bitcoiners, there comes a time when they have to explain Bitcoin to their loved ones, whether it's their parents or their siblings or their wife and kids or whatever. Have you done that, and do they appreciate what you're so enthusiastically talking about on the internet with strangers?
So my wife has no interest in finance at all. Like from the day I met her, like at all. So like I was not going to win over her by talking about stocks or any of that stuff. So it's kind of interesting. And it's, it's nice because like when I'm in it, especially on the computer. I'm trying to learn, I'm reading all these different things. And when I step out of my office, it's just like I leave all that stuff in the office, and her and I just talk about other things. Now she might disagree with that, but I feel like I do not talk about like almost any of this stuff with her.
What about Bitcoin though? Do you talk about Bitcoin?
She definitely has heard the term Bitcoin probably a lot more than any spouse wants to hear, as far as like in casual conversations, if I'm on the phone or whatever, or if I'm recording a podcast, whatnot.
But you don't keep her up
Definitely.
late at night telling her how it's going to change the world for
Oh,
your
no, no,
children
no.
and stuff like that?
Hell no.
You're a better man than me.
It'd be fun to have her opinion, but I don't think that I do that. We talk about other things.
Right,
so.
right. Another question was, and I think I know the answer, but I ask you anyways. In terms of trying to trade the top of a next cycle, the age-old question.
Yeah.
What are your thoughts?
So I think that to do it,
or rebalancing, just for the Rex, it's basically the same, but I wanted to get that in there. Like if you wanted to rebalance a portfolio or somehow trade the top.
I did this in 2017.
I remember you saying.
I traded the top of 2017, and dude, I knocked it out of the ballpark. But at the same time, right, I knocked it out of the ballpark, but I literally almost had a heart attack doing it. So I think that's where I'm coming at this one from maybe a different lens of saying, like, I don't know that I would recommend that. And I think back in 2017, I did not have nearly the conviction that I have today as to what I think this is becoming. Like, all the legal considerations were still very valid and concerning back in 2017. You didn't have like banks getting regulated and any of that kind of stuff. If you talk to people on the street about it, they had no idea what you were talking about. You were just in a completely different environment back then than what you're seeing today. You didn't have the macro backdrop of things getting ready to just blow up all around you. You weren't having these fiscal like disasters where they're having to do UBI. There's been a lot that has changed since the 2017 period of time. And so, not only that, if you were going to try to do this, let's just say you wanted to hold your Bitcoins. Let's say you had 10 or what, I don't know how many Bitcoins the typical person has, but let's just say they have a few Bitcoins and they wanted to protect, that at the top. So let's just say you try to do that through a put. Your put, especially after the volatility that I expect we're going to see between now and then, can you imagine how that put is going to be priced based off of the last 12 months of volatility? I mean, it's going to be mind-blowing how expensive that's going to be to put on a put to protect that position. So then you get into the tax implications of if you own it now, I think that you're going to be beyond the 1 year mark. Every country is different. So people that are listening to this in a different country, they got different tax considerations. But if you sell and then let's just say you take a 15 or a 30% hit on the price because you have that realized gain. Now you got to ensure that you at least get that much of a drop in the price. Then you have to accurately re-enter the position at a lower price. I just think that it's an incredibly difficult thing to do. And I would caution people against that, mostly because of everything that's happening in the macro backdrop. Because one of the big risks that you have on this cycle that you definitely didn't have, in my opinion, back in 2017, was the risk of a sovereign entrant. What if country X decides that now they're going to step into the market and they're just going to print like crazy and swap it for Bitcoins, which can't be printed? What is that going to do to the price? And if you're out of the market because you're here, you're just Mr. Joe, the best trader on the planet mindset, like I can do this, right? I got this. And some sovereign entrant steps in. Are you accounting for that risk? There's no way you're accounting for that risk if you're trading it. And that's why I just buy. I don't, even though I feel like I have a good beat on maybe the MACD or whatever, or something that's being overbought and we're going to see an interim correction, I don't sell those positions and then buy them back and realize those tax. Like, dude, that's that's a fool's errand, in my opinion. A strong fool's errand. But hey, there's people doing it.
Yeah.
Don't let me discourage you. That's my point of view.
This kind of ties into another question, but it was actually comes from Chris from Snappa, one of the guys who came out talking about adding Bitcoin to their balance sheet. He was wondering how you did it personally for your business. Like, obviously not sharing any private details, but did you incrementally DCA? Do you just, as income comes in, does a certain percentage go towards Bitcoin? He was hoping to understand that a bit better.
Yeah. So you can go to almost any of these exchanges and you can open a corporate trading account. And then just like you would on a personal level, you're just taking your cash, whatever free cash flows your company's kicking off, and whatever type of allocation you want to apply to it, then you just send that over to the exchange and you conduct the buy. Unlike Michael Saylor, I do not have a person that is dedicated to buying 38,250 Bitcoin. But yeah, I mean that's all there is to it.
How do you feel about borrowing money to invest in Bitcoin at this point in time?
I'm against that. I don't think that yeah, I just think it's bad form, and just can you have a little bit of leverage, especially if you're kicking off a lot of free cash flows that you could recuperate and pay back really easily? Of course. In business school, they'll tell you that not having a little bit of debt to leverage onto your income statement, balance sheet, whatever, is you're not taking advantage of the returns that you could get. I would caution people against it unless you really know what you're doing from a financial standpoint, and just a leverage ratio. You're wanting to make sure that you're a debt to equity of like 0.5 or less. I think from a business standpoint, I think it's a safe and sound strategy. On an individual level, just I wouldn't recommend it.
Be careful. Last one. Someone wants to know how you think the bond market blowing up is going to affect real estate. I'm not sure if they're talking about residential or commercial or both, but presumably you've touched on this in the past.
So that's a really tricky question, mostly just because of what type of real estate are you talking about? Where are you talking about? What's the population growth of where you're talking about? Because like those are really the big factors in real estate. Where I think that it's going to get difficult, if this scenario would play out and you see the dollar, pretty much fiat currency, start to explode, the discount rates, the cap rates that you're seeing in real estate, I think people start looking at that risk way differently. Because right now you're dealing with a cost of capital that is totally out of whack. Totally out of whack. So is that going to have an impact on real estate? Of course it is. I'm not quite sure as to what the implications of that'll be, because I think so much of it comes down to how much of the labor market continues to be employed, which is very regional specific. And to make any type of definitive, like this is what's going to happen, is just I think would demonstrate how little you know opposed to how much you know. And that's not me trying to avoid the question. I think there's too many variables for the unique piece of real estate that you're talking about for me to really say one way or the other.
Yeah, fair enough. I heard today that I think I'm not sure if it was Canada wide or in the market that I'm in, but it was the best month for real estate transactions ever. And I talked to some buddies that are in the car sales business, same thing. And so, I interpret that as we're in a honeymoon period, because the people whose income wasn't impaired by COVID, they've just had months of being at home and saving more than they otherwise would have and not spending. And the ones that were impaired, at least in Canada, they got support from the government that pretty much replaced their lost income. So, the spending habits are probably amplified that what they were before. They were pent up, and
Incomes have
now
gone
they're
up.
amplified. Yeah, exactly.
Yeah.
There you go.
As Lynn has said, incomes have gone up this year, so that shouldn't surprise anybody.
Right. So honeymoon period. And then what I'm wondering, because we talk about inflation and those with assets kind of being on the winning side of that and those with no assets being on the losing side. But, at some point, the market has to be able to buy that real estate. Like, yes, real estate benefits from inflation, but there's got to be someone with the ability to buy those houses at those prices. Because if you put a house on a market, doesn't matter how much inflation there is, if it's $2 million and nobody's willing to pay $2 million, well, then it ain't $2 million anymore,
That's
So
right.
that'll be, that's something that I'm watching, a lot to see when that kind of turns over and changes. Because I think that will cause a commotion in itself.
So much of it is what's happening in the bond market and how all this liquidity is being provided and how it's been provided for the last 12 years. It's been gone straight into the top of the bond market, which has dropped interest rates, which makes the value of everything go up. So if you start seeing that transition, interest rates trying to come up and everyone knowing that the market's being manipulated and that all their expenses everywhere they look are going up, but it's not necessarily being reflected in the bond market, that's going to have a tremendous impact, because your private sector is going to start saying, yeah, I realize CPI is zero, or at least we're saying that it's this lower amount, or it wouldn't be that. It would be, I see CPI going up, but the bond market is still pricing risk at a discount to the inflation rate, which try explaining that one, right? but that would be the scenario that would actually be taking place at that point. Mm-hmm. Which would make no sense to market participants. So I think your private sector is going to look at that government issued debt, and they're going to say, well, that's not what I'm seeing, and this is the rate that I want to use, and therefore it's going to start impacting the prices of goods, services, pretty much everything.
Yeah. Preston, strange times we're in, man. And I think it's been 6 months since we last spoke. I think those are good intervals for us to have a chat, because so much is happening in that amount of time these days. Where can people learn more about you, follow your work, and all the great stuff you're doing?
I'm on Twitter. I have a podcast. It's called We Study Billionaires. Check it out. We'd love to have you guys part of the community, and love getting questions and just interacting with people on Twitter. And John, I appreciate the opportunity. I thoroughly enjoy talking with you. I would love to do this every 6 months.
Yeah, well, that's a date, man. I really appreciate that. And I reflect that exact same sentiment. And I know you're going to be on with Andy Edstrom on the Swan Signal podcast tomorrow. Is that right?
That's tomorrow night. Yep.
Yeah, must see TV. So everyone who's listening, check that out. Preston, thanks again, man. And we'll talk again in the future.